Welcome back to the Deep Dive. It's Friday, February 6th, 2026.
Wrapping up the week.
And, man, the markets are feeling twitchy. I don't know if you've checked the temperature this morning.
Oh, yeah.
I pulled up the Buffett Indicator app on my phone just before we started. And by the way, if you're listening and feel like you're flying blind, you really should just go search for that on the App Store.
It's a great little tool. A quick sanity check.
It really is, just to see where the total market is versus, GDP.
It's the thermometer you check before you decide if you need a coat or a swimsuit. And right now, it's getting warm out there.
It really is. And usually when it's this hot, I'm looking for reasons to sell. But then this earnings report drops yesterday afternoon, and I found myself staring at a company that, I'll be honest, I have historically just completely dismissed. We are talking about Roblox, ticker RBLX.
Ah, the video game for kids.
That's what I thought. I thought it was just, digital Legos for my nephew.
Yeah.
But I'm reading this Q4 2025 report. The sheer scale of the numbers, revenue, users, the cash flow, it's not a game anymore. It's starting to look like a digital nation state.
It's funny you say that because that kids game narrative has been the biggest arbitrage opportunity for investors for the last 3 years.
How so?
While Wall Street was treating it like a poi company, they were quietly building a full-blown economy.
Okay, well, let's pressure test that economy then.
Yeah.
Because the headline numbers were startling. Q4 revenue came in at $2.22 billion.
Up 43% year over year, which is huge.
But in the world of Roblox, revenue is actually kind of the boring number. The real number, the one that tells you what's actually happening, is bookings.
Right. And we have to distinguish the two because it completely changes how you value the company.
So break it down for us.
Okay, so bookings is the cash register ringing today. You give Roblox $20 for a gift card. They have $20 in bookings immediately.
Cash in the bank.
Exactly. But because you spend that virtual currency over, say, a few months, the accountants, the GAAP rules, force them to sprinkle that $20 out as revenue over the lifetime of the user.
Ah, so it's like a gym membership where you pay for the whole year up front in January?
Perfect analogy.
The gym has the cash, but on their profit and loss statement, they only earn, what, 1/12 of it each month?
You got it. And that difference creates a massive disconnect. If you just look at revenue, you see a slow-moving ship. But if you look at bookings,
which were up 63% to $2.2 billion.
You see a rocket. I mean, that is raw demand. That's liquidity hitting the bank account right now.
And what's driving that demand? The traffic. The daily active users, or DAUs, hit 151.5 million.
Which is up almost 70% from last year.
I was trying to visualize that number, 151 million people. That's basically half the population of the United States logging in every single day.
It is a staggering number. And you have to remember, back in 2020, that number was sitting around, 32 million? They've essentially quintupled the population of their digital world in 5 years. There aren't many platforms in history that have sustained that kind of compound growth at this scale.
But this is where it gets weird for me. The content. I was scrolling through the report, looking at the top experiences driving all this traffic, and I had to laugh.
I think I know where you're going with this.
You have these massive viral hits with names that just sound like fever dreams. 99 Nights in the Forest was huge. But the one that really caught my eye was Steal a Brain Rot.
Ha! Of course you were going to bring that one up.
How can I not? Steal a brain rot. It sounds completely ridiculous. But this is the power of their model, isn't it?
It is. Roblox didn't sit in a boardroom and decide to make that game.
No. Some kid or developer made it, and the algorithm just did the rest.
That is the YouTube of gaming thesis playing out right in front of us. In a traditional gaming company like EA or Ubisoft, you spend $200 million building one game and you just pray it works.
And if it flops, you're in deep trouble.
Right. But Roblox is just the platform. They provide the tools, the servers, the physics engine. The 151 million users, they're the R&D department.
They throw millions of ideas at the wall and see what sticks.
And when something like Steal a Brain Rot sticks, it goes global instantly.
And the engagement numbers, they back that up. 35 billion hours spent on the platform in Q4 alone.
Up 88%.
I did the math on this. 35 billion hours is roughly 4 million years of human attention, consumed in 3 months.
It just captures the attention economy better than almost anything else. But we need to pivot to the single most important metric in this entire report.
Okay.
It's not the total users, it's who those users are. Because the bear case for Roblox has always been.
Kids grow up.
Exactly. They'll turn 16, discover cars, and leave Roblox behind.
But the data says they aren't leaving. The 18 and older demographic grew over 50% year over year.
Exactly. This is the aging up phenomenon, and this changes the entire investment thesis.
Why is that so critical?
Because a 9-year-old has to ask mom for a credit card. An 18-year-old or a 24-year-old has their own debit card. They have disposable income.
And they spend more.
The report notes that this older demographic monetizes at a rate 40% higher than the younger cohort.
It must also change the advertising picture, right? If your audience is 10, you can sell toys and cereal.
Sure.
But if your audience is 22, suddenly you can sell insurance, streaming subscriptions, fashion.
Maybe even cars. Precisely. It expands their total addressable market, the TAM, from kids' allowance money to, global consumer spending.
So Roblox is shifting from a playground to a third place.
That's a great way to put it. It's where this generation hangs out. They aren't just playing games. They are sitting in the lobby talking to their friends. It's replacing the shopping mall.
Okay, so we have the scale, we have the demographic shift. Let's talk about the people building this stuff.
The developers.
Yeah. We joked about steal a brain rot being user-generated, but these aren't just hobbyists anymore. I saw a stat in a report that just blew my mind.
Which one?
The top 1,000 creators on Roblox are earning an average of $1.3 million a year.
That's a serious business.
That is not pizza money. That's start a studio and hire employees money.
And that is absolutely key to the flywheel. Over 100 developers made more than $1 million last year. Total developer payouts are on pace to exceed $1.1 billion.
But Roblox takes a hefty cut, right? It's something like a 25% payout rate to developers.
It is. But because the volume is so high, it's worth it for the creators.
Okay, so let me play devil's advocate here. This brings me to the moat.
Go for it.
If I'm a developer and I know Roblox is taking 75 cents on the dollar, why don't I just go to Epic Games? Or use Unity? Why stay and pay the Roblox tax?
That is the multi-billion-dollar question. And the answer has, I think, 3 layers. First, it's the infrastructure as a service.
Meaning?
If you build on Unity, you have to figure out hosting, multiplayer netcode, matchmaking, cross-platform support. It's a nightmare. On Roblox, you press publish.
And it just works.
It works on every device in the world instantly. That saves you millions in back-end engineering.
Okay, so it's convenience.
It's convenience, but
Yeah.
the second layer is the lock-in. It's the social capital, the network effect.
If you move your game, you lose the audience.
You lose the 150 million people who are already logged in with their credit cards attached. And more importantly, users can't bring their avatars with them.
That's a great point. My nephew has spent real money on his avatar's shoes. He's not going to just leave those behind.
Exactly. It's identity lock-in. And the third layer, which people really underestimate, is safety.
Trust and safety.
Right. Roblox spends hundreds of millions on it. AI moderation, human review, parents trust the brand. You don't get that seal of approval if you launch a standalone game. So yeah, developers grumble about the tax, but they pay it because that's where the customers are.
All right, let's get into the messy part, the financials. Because if you just look at the bottom line, the net income, it looks terrible. Its GAAP net loss for Q4 was $318 million.
And that loss actually got wider compared to last year.
So if I'm an old school value investor, I see a company that's existed for 2 decades and still loses money, and I run for the hills.
And if you ran, you'd be missing the gold mine. This is the classic Amazon in 2005 situation. You have to look at the cash flow, not the net income. While they lost $318 million on paper, their free cash flow surged 155% to a positive $307 million.
Okay, hold on. Walk me through that. How do you lose $300 million but put $300 million in the bank?
It goes right back to the bookings versus revenue thing we started with.
Yeah.
They're collecting cash faster than the accounting rules let them recognize it.
That deferred revenue.
It creates a massive source of float. But there is another factor we have to be honest about: stock-based compensation, or SBC.
Right. This is the part that always worries me. They pay their engineers in stock.
A lot of stock.
It counts as an expense on the income statement, but it doesn't drain cash. So it makes free cash flow look amazing, but
it dilutes the shareholders. You are absolutely right to flag that. A portion of that free cash flow isn't truly free. It's coming out of your equity slice.
So is it real cash flow or not?
I think it is, because even if you adjust for it, the sheer velocity of their bookings growth is starting to outpace it. They are generating real cash now. They have $5.5 billion in cash on the balance sheet.
Which means they're self-funding. They don't need to borrow money at high interest rates.
Exactly. And they're using that cash to build massive data centers for AI training. They're trying to make it so you can build a game just by typing, make me a jungle with a hidden temple.
Which requires billions in R&D.
It does. which also explains the operating leverage we're starting to see. I noticed they've slowed down hiring.
Right, revenue is growing at 43%, but headcount is barely budging.
That's the software dream. Costs stay relatively flat while revenue zooms and margins just explode. We are just starting to see that kick in now.
It all sounds perfect, which, makes me nervous. We have to talk about the risks.
Of course.
What kills this company?
The biggest structural risk is, without a doubt, regulation. We've seen the lawsuits in the US and the EU about child safety and data privacy.
Right, the predatory monetization arguments.
Exactly. If regulators decide Roblox's mechanics are too much like gambling, or if they pass strict laws that force major changes to how kids can interact online, that could really hurt engagement. It adds friction.
And what about the viral dependency?
Yes, we laughed about steal a brain rot, but if Q1 of 2026 comes around and there isn't a new viral hit, bookings could dip.
It's a hit-driven business masked as a platform.
It creates volatility. And we should briefly mention the geopolitical risk with China.
The Tencent partnership.
Yeah, it's been a real struggle. The regulatory hurdles in China are just immense. I would not hold your breath for a massive unlock of the Chinese market next year.
Okay, so let's talk about the pilot of this rocket ship. David Baszucki, the founder and CEO. I was looking at the proxy statement, and his compensation is unique.
It's extreme.
Salary, $0. Cash bonus, $0.
He's working for free.
Well, free is relative. He owns about 6.8% of the company, so that's over $3 billion. But his new pay package is entirely performance stock units.
So he only gets paid if the stock price hits some incredibly aggressive targets.
That's the ultimate skin in the game, isn't it?
Oh, I love seeing that as an analyst. He isn't taking a fat salary while the stock languishes. If shareholders don't win, he doesn't get a bonus. His incentives are perfectly aligned with ours.
So let's land the plane on valuation. This is the deep dive. We have to answer the question, is there value here?
Right.
If I look at a PE ratio, it doesn't exist. Price to sales, it's not cheap.
Yeah, if you use a strict Benjamin Graham checklist from 1950, you wouldn't touch this with a 10-foot pole.
So how do you value it?
Modern value investing is about the present value of future cash flows. So we ran a discounted cash flow model, a DCF.
Okay, walk us through the scenarios. The stock is trading around 63 Townsers a share as we're recording this.
Right. So let's be pessimistic first. Let's say the aging up trend stalls. Let's say growth slows way down to just 15% a year.
Pretty bad outcome.
A very conservative scenario. In that case, the intrinsic value comes out to roughly $63.
So basically right where it's trading today.
Exactly. And that, to me, is fascinating. The market is pricing Roblox as if the growth story is already over. It's pricing it for a hard landing.
But what if they hit their targets?
That's the growth scenario. If they maintain just 25% growth, which is basically half of what they just did this quarter, the intrinsic value jumps to nearly $130 per share.
So you're looking at a potential double from here.
That is the asymmetric bet. You are buying a company with 150 million daily users, massive cash reserves, and a founder working for stock, all at a price that assumes they fail to grow.
The downside seems capped, but the upside.
The upside is wide open.
And I see Kathy Wood and the ARK team are still in on this one.
They trimmed a little bit last year, but yeah, it's still a top 10 holding for them. It fits their disruptive innovation thesis perfectly. They see it as a primary pillar of the future internet.
Which leads me to my final thought for you, the listener. We spend so much time analyzing social media stocks, Meta, Snap, TikTok, but those are legacy interfaces. They're scrolling feeds of videos and photos.
2D experiences.
Exactly. But if you look at a 12-year-old, or now a 20-year-old on Roblox, they aren't scrolling. They are inhabiting a space.
Right.
As AI makes the graphics better, as the fidelity improves, isn't this the real threat to Facebook?
It's the question of the decade, isn't it? Is the future of the internet reading and watching, or is it experiencing?
And if it's experiencing,
then Roblox has a bigger moat than Instagram.
And if that's true, 150 million users is just the warm-up act.
It definitely forces you to rethink what social media actually means in a portfolio.
Absolutely. A lot to chew on there. Before we wrap up, just a quick reminder for everyone. Full deep value research reports, including the charts on those user demographics we talked about, can be found in the description links.
And please remember, all of this analysis is based on publicly available sources. It might be subject to revisions or different interpretations.
The content is for educational purposes only and does not constitute investment advice. Please conduct your own due diligence before making any investment decisions.
And if you want to listen to our full deep dive about this topic or access more advanced content, welcome to join the Deep Value Club membership or subscribe to us on deepvalues.ai.
And don't forget to like this video. We really appreciate it. We'll catch you on the next deep dive.
See you next time.